All right, let's get right into it. We're going to be breaking down one of the biggest tax law changes we've seen in a while. And what's so interesting about this one is that it's a real double-edged sword. For some people, it created some amazing new opportunities. But for others, well, it put up some pretty big new walls. So yeah, that's really the core of what makes this law so fascinating. It wasn't just a simple tax cut for everyone or a tax hike. No, this was way more complex. It was a deep structural change to the tax code itself. And the result? It literally created two completely different realities, opening up golden opportunities for some while slamming the door shut for others. Okay, so let's get into the details. The official, government name for this thing is Public Law 11921, but almost nobody calls it that. It's much better known as the One Big Beautiful Bill Act, or OBA for short. And that name, well, as we're about to see, it's pretty ironic to say the least. This thing really shook up the entire 2025 tax code. So here's our game plan. We'll kick things off with what the OBBFA actually does. Then we'll look at the two very different stories for expats versus immigrants. We'll dive deep into the child tax credit, which is a huge part of this, touch on some key deadlines you absolutely need to know, and then I'll wrap it all up by looking at the bigger financial picture. All right, section 1. Let's pop the hood and see what this thing is all about. What are the nuts and bolts of the OBABA? What did it really change in the engine of the US tax system? Okay, so the act did a bunch of things. It tweaked the standard deduction, messed with some itemized deductions, changed up moving expense rules, the usual stuff. But honestly, the real heart of the matter, the stuff that's truly a game changer, are those last 3 points. We're talking new rules about who needs a social security number to get tax credits, huge permanent changes to the child tax credit, and letting some key debt relief provisions just expire. These are the changes that are creating totally new financial realities for people. So with that in mind, let's look at our first group, American expats. For them, this law creates a whole new strategic puzzle when it comes to their taxes. And a first big piece of that puzzle is this number right here, $130,000. So for the 2025 tax year, the Foreign Earned Income Exclusion, you probably know it as the FEIE, got a pretty nice bump up to $130K. That means expats can now protect a pretty huge chunk of their income earned abroad from US taxes. And right there, that creates a massive strategic choice, a real fork in the road for expats. See, on one hand, you can take the FIE, potentially wipe out your US tax bill completely. But, and this is a big but, doing that could mean you lose out on some really valuable refundable credits. The other path is to use the foreign tax credit, the FTC. That gives you a dollar-for-dollar credit for taxes you've already paid to whatever country you're living in. Now, it might not get your US tax bill to zero, but it keeps you in the game for those credits. Credits that can mean actual cash back in your pocket. It's a whole new strategic calculus. Okay, so let's completely switch gears now. Because while the OBBA opened up these new strategic doors for expats, it did the exact opposite for another group, tax-paying immigrants who use an ITIN to file. So the key to understanding this side of the story is the ITIN, the Individual Taxpayer Identification Number. Now, what is that? It's basically a number the IRS gives out to people who need to file US taxes but aren't eligible for a social security number. It's super important to remember an ITIN is not a social security number. It doesn't give anyone the right to work. It is purely 100% a tool for processing tax returns. That's it. And this quote from Nina Olson, who used to be the National Taxpayer Advocate, think of her as the top watchdog for taxpayer rights inside the IRS, really gets to the heart of why the ITIN even exists. Her point is that the IRS's main job is just to collect taxes. And for a long time, the policy was basically don't ask, don't tell. If someone wanted to pay their taxes, the IRS gave them a way to do it with an ITIN, no matter their immigration status. It was just a practical way to get the money in. And you know what? It worked. We're talking about millions of tax returns filed with ITINs every single year. And that adds up to billions of dollars in tax revenue. This isn't just some small footnote in the federal budget. It's a really significant amount of money. Okay, so this is where everything really comes to a head. The clearest example of the two different worlds created by this law is what it did to the child tax credit. This is the exact point where the paths for expats and immigrants just completely split apart and go in opposite directions. All right, take a look at this table. On the surface, it looks pretty good, right? The max credit went up from $2,000 to $2,200 per kid. Great. But the devil is absolutely in the details, right down in that last row. Before this law, the main rule was that your child needed a social security number. But now, look at the 2025 rule. Not only does the child need an SSN, but now at least one parent on the tax return has to have one too. That's the poison pill. And that's the central paradox of this entire bill. They made the credit bigger, more generous on paper, but at the exact same time, they slipped in this new rule that just completely cuts off a huge group of families who were paying their taxes. Specifically, any family where the parents only have ITINs. So let's just walk through how this works cause and effect style. Step 1, they dangle the carrot, a bigger $2,200 credit. Step 2, they bring out the stick, this new rule that says a parent needs an SSN. Step 3, that rule automatically disqualifies anyone filing with just an ITIN. And step 4, the final result, a huge financial barrier just got thrown up for thousands of tax-paying immigrant families. A major benefit is now tied to your SSN status, not just the fact that you're paying your taxes. Okay, moving on from the big policy stuff for a second. Let's talk about something super practical, but also super important: deadlines. If you have any kind of international financial life, you absolutely have to know these dates. And trust me, these are not the deadlines you want to miss. And this is the magic number you have to burn into your brain: $10,000. If the total amount in all your foreign bank accounts combined hits 10 grand at any point during the year, I mean, even for just one day, you have to file a special report called an FBAR. It stands for Report of Foreign Bank and Financial Accounts. And I'm not kidding. If you miss this, the penalties are absolutely brutal. So for all you expats out there getting ready to file your 2025 taxes, these are the dates you need to mark on your 2026 calendar. Remember, you automatically get until June 15th to file. If you need more time, you can file an extension and push it all the way to October 15th. That October date is also the deadline for your FBAR. But honestly, my best advice, just get it done early. Don't put yourself through that last-minute stress. All right, so let's zoom out. We've looked at all the different pieces. What does this all add up to? When you look at the One Big Beautiful Bill Act as a whole, what does it really tell us about where U.S. tax policy is headed? When you boil it all down, the FBAR really creates a tale of two tax systems. On one side, you have expats with social security numbers who now have new strategic decisions to make about maximizing their money. On the other side, you have tax-paying immigrants with ITINs who now face a new wall blocking them from a major family benefit. It created two totally separate financial worlds, all based on whether or not you have an SSN. And what it really did was expose this fundamental tension in our tax system. Are we trying to get everyone to pay their fair share? Or are we using the tax code to decide who gets benefits? And that leaves us with this huge, lingering question. What is the tax code for? Is it just a machine to collect money to run the government? Or is it a tool we use to shape society, to hand out benefits, and to decide who's really included? What the One Big Beautiful Bill Act makes clear is that it's trying to be both. And that forces us to ask a really tough question. How do you balance those two very different and often conflicting goals?